What's up, guys and gals? Lee Ryder here, Crypto Didact, and in this video we're going to cover market aura number 4, support and resistance levels. This is where we're going to start to get into the more nitty gritty, and it'll start to become more clear about how we can use these market auras to predict where price will turn and also where to place our stops, targets, stuff like that. So without further ado, let's get to the screens. Alrighty, guys and gals, well, welcome to the lecture on support and resistance levels. This is market aura number 4. This is a very critical and important lecture to understand, because this will be the basis of most of all of our technical analysis, is defining these levels, because these are the levels that we want to be trading at. We don't want to be trading in between them. These are areas of high reactive market action. So let's take a look. So let's get the definitions out of the way, okay? So a support level is a level that tends to give support to a falling price. So that means as price is falling, this is going to be an area where a lot of people have said, hey, this is an area that I don't think the price should be at, and it's going to tend to reverse from that level. Now, once that level is broken by a certain margin, this tends to be an area where this will be support and or resistance in the future. So, like for instance, a trend line, as it breaks through the bottom of the trend line, if it comes back up to that level, it's usually going to be an area of resistance. So, resistance level is opposite of that. It's going to be where price is climbing, and it is going to be a level that a lot of people have said, hey, I think the price is too high, and it's tended to going to reverse from there. Now, this is crucial to understand about when we're talking about support and resistance, because defining these areas is going to allow you to put your orders ahead of these areas and to be able to get into the trade, because once the price is at that level, it tends to move very quickly, and the likelihood of your order getting filled decreases a lot. So it's very important to understand this stuff. So along with support and resistance, we need to define the kinds of support and resistance level. So the first being proactive, right? This is going to be Fibonacci's, trend lines, moving averages, VWAP, and market profiling. Now, these are levels that are purely predictive in nature. The price action has not told us, or the volume profile has not told us, that this is an area that is likely going to be support and resistance. We are predicting in advance what this level is likely to be. So next is reactive. Now these are opposite of the proactive. Reactive means that we are reacting to the price action, and in the past this has proven to be a level of support or resistance. This is going to be volume profiling, price swings, your IB or initial balance, gaps. Now, in cryptocurrencies, the gaps don't happen quite as much because it trades 24 hours a day, versus in like an equities market, the price might gap up from the close to the open. So that's not as important, but still important to understand. And then also candle patterns. Now, a reactive support and resistance level, these are levels where in the past, the structure of the price action, or the volume profile has told us, hey, this is likely to be a level where a lot of buyers or sellers are going to come in. So this is one of these areas we want to watch. So in this particular lecture, we're going to use two different examples to illustrate proactive and reactive. For the proactive, we're going to demonstrate some trend lines on the chart, and on the reactive, we're going to use some price action, and we're going to look at price swings, or price highs and lows, to determine the support and resistance levels. So the first thing we're going to look at is proactive trend lines. So as we can see here, this is the same chart. I have just broken it up so we could see the progression of how we're defining that. So right here in section 1, you can see that there's this line that's forming where the price, it looks like that this is a level of support. So you can see as it happened again, it came down and touched it, that again we got it as support. Right here, we got it again as it touched down, it became support. As it came down here, it became support still once again. Now, this is important to understand because if you see this forming back here, you now know where you want to start to target your trades. And you want to start putting in buy orders around these levels because when the price gets these levels, it's likely to show that it's going to reverse. And usually a trend line like this will be a trend line with 2 touches and confirmed on the third. So that's something to remember. 2 does not make it tradable per se. It's higher risk. 3 confirms the trend line. So the next thing we're going to look at is going to be reactive. And this is going to be price swings. So we're actually going to look at some price action. So reactive, as you can see, 1 here, we have an area where the price is moved up into this level, but there was a lot of sellers that came in and the price was rejected. Second time it came up here, and also when it came up to this level, it got rejected. Then you can see way down here in the future, as it came and touched this level, it reversed again. So these are going to be very common, especially in markets that are range bound or trading sideways. Now in a market that's trending, that's why these trend lines are trend lines, right? You want to use those in trending markets, but the market is not trending all that often. Maybe a quarter of the time it's trending, so these price swings are actually using the price action to determine support and resistance is going to be a much more accurate way and a tool that you will use more often because that is the state the market stays in most often. So in closing, guys, we went over proactive and reactive. We gave 2 different examples of what that means. Later in the series, after we get out of this basics, we will dive deeper into these different tools that we'll use, especially on how you want to formulate your trading strategy, because these all will be a part of it. And I hope that was helpful. I know it was basic, but we'll get deeper in the future. So thanks for sticking with me, and I hope that helped. We'll see you later, guys.